Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, the last few days have felt a little faulty. If you've been in the virtual trading floor, on the radio, you've heard a little bit of the frustration. Last week I started talking about how it's getting tricky, that most bears on Wall Street are starting to buy stock and turn bullish, and things aren't moving the way they have been moving. That we're in this consolidation, but if you add on strength, you're not getting rewarded. You're actually probably losing whatever you had on good prices. So PS, in the last day or so, it became even more tricky. Yesterday came in, was blindsided by the news from Apple, the downgrade in Facebook, and then, just to add things up, yesterday the banks reversed and then opened up, and then they fully just failed. So, connect all the dots, and if you're on the virtual trading floor, you saw me by 2 o'clock, out of all my longs, and actually short the spiders. So I became net short, and granted, I didn't make money today, but my drawback wasn't that big. Okay, a 2-day down move after enjoying a nice rally from August, I'll take it any time. It could have been a bit more perfect by having balls to the wall short, because it did feel like that, but you know what, no big deal. So at this particular point, the upper floor in the S&P broke. That 1449 to 1451 level to keep momentum intact broke. So now the question is, what's the next level? Where could we look? But if you're not caught up in it, you can measure it and figure it out as we go. So if you look at the chart of the S&P, you will see that here we are. This was at upper level for the first time. We broke to the downside. If we were staying in here, it would have been a little bit more constructive, but we broke it. So once momentum leaves an upper level, you leave the upper level if you are a momentum trader, and we broke it once again. Right here is your 21-day moving average. This also correlates to, the last breakout that we had, which comes in about 1435-ish. Okay, so right here it'll be interesting to see if we hold. And then you also have the 50-day all the way down here. So if you look at the grand scheme of things, okay, from where we came in October, or even where we bottomed in June, this is what happened here. People are crying about stocks going down, and this is just right here. Okay, you can't be crying about breaking an upper flag, just shaking things up. You got to be actually probably excited that volatility could pick up, and maybe we get some two-way action, and we can continue. If you look at this trend a little bit closer since it started, I'll just say on June 4th, we've been riding. We've been basically going below the 8 and 21. Okay, going below the 8 and 21 before coming back up, and doing this entire way. And I guess we got a little bit spoiled as, when the ECB met and we broke above this last resistance here. All right, we started just tracking the 8-day, which made it very easy to hold 6, 8, 12 positions. So at this point, since we are professionals and we could re-enter, we don't have to sit and hold our nose and go under the water, we could sell here and say, okay, let's wait. This is one spot to wait. And then I would say, this is even another spot to wait, okay, where it comes in and perhaps tests this zone. We shall see. We'll talk about it along the way over the next day or so. We'll put in some Fibonacci retracements to show, from the low to the high. I'll do one right now and see where that is. Okay, you can put your Fibonacci retracement from the low, all the way to the high here. All right, so really the 25% Fibonacci retracement, from this entire move since the June 4th lows only comes in at 1421. So the strongest markets hold the 25%. And then even strong or considered strong markets hold the 0.38. So if you put this in perspective, this is not that big of a deal, guys. It's only big of a deal if you chase in at too much size and you can't handle holding things for more than a day or a few days. So 1421, 1394, that's the two levels that should be buyable, in the coming weeks. Who knows how long it's going to take? Who knows if we even get there? But be armed with that level and that level, and put in perspective the type of move we've seen. Whereas, granted, every bull, every bear out there in the world is going to be claiming victory, but they missed this entire move. So okay, look at what they caught here. We were not excessively bullish up here. We were actually talking about the oscillator on this day being plus 60 and probably net short coming into here. So, and then getting flat here is fine. So anyway, I'm not here to pick a fight with people, but I'm just saying you don't have to pick a top, the top will show you, and then as traders you could switch gears and now trade from a little bit more cautious / net short and figure it out. So now I'm going to run through some stocks. Now we talked about not chasing Google, okay, and look at this topping tail in Google. You know, you had a buy price here at 625, a buy price as it went over the highs, you know, and then here at the 21-day, this is a topping tail. This is why you don't chase this move. And if you started shorting it here, you probably didn't wait till this, you know, scenario, and you might have even got stopped out today. You know, but now here's your topping tail. That's what you waited for. Now maybe you short versus this, and you get some type of pullback, you know, that I think is going to be viable around 730, okay, or maybe even a retest of this area. So 1, 2. Okay, that's Google. Go to Amazon. Amazon should not have done what it did. You know, it bounced off the 21-day like it did over here, and then, you know, failed pretty damn miserably. Okay, so that's another sign that momentum is somewhat leaving. Apple. Okay, pretty harsh down day. You know, I said pre-market or during the day in the chat room, I'm trading it versus 683, break 683. I'm not only out of my active account, I'm out of my swing account. No reason to be in it. If momentum leaves, I leave. We break the 21-day, didn't even think about reclaiming it. So I got out and we'll figure it out. Okay, it's right now holding this gap. If we see some type of 80-20 trade tomorrow where it trades through today's low, comes back up, creates a tail, maybe I'll get back involved for a swing trade. But who knows? It could come back, and if the market wants to really be pressured, test this 50-day. As far as the banks that showed strength yesterday, look at this. Showed strength. You know, opened above the prior day high, went below it, and closed on the dead lows. That's a sell signal also. Goldman Sachs, you know, same type of scenario. You know, if it was healthy, it should have held up here and continued. It didn't. It traded below the previous day's high and failed. And now we're coming into the 21-day. So, you know, from here to there, you know, this is getting a little sizable and being a little bit more destructive than constructive. But here's a 50-day moving average. It'll move up, and we'll figure it out. JP Morgan also. You know, now from this flag pattern that looked as if it could break higher, you know what? It's not yet, or it's not going to close on the lows of the day. You know, if I was in it, I would have got flatted. And now this thing could also come in and test a 21-day. So if things change, be flexible. Okay, if you're in a macro tier 1, you stay there. If you were in, you know, macro tier 2 up here thinking it's going to break out, you better have got back to tier 1. You know, oil, which we've talked about as being weaker than everything else, this looks lower. Remember, it broke this trend line here, boom, came back into support, opened up, failed at the moving averages, closed on the lows of the day. This also probably goes lower. At some point, lower oil will be good for the overall economy, you know, but I don't think in the low 90s it's going to really transfer over to the consumer. So Parker, if you come to me, you know, we talk about when the market realizes situations versus, you know, the psychological aspects. Right now, lower oil is probably going to hit oil stocks, and that's going to hit some sectors of the S&P and obviously the OIHs. But at some particular point, you know, prices to pump come down, and, you know, there's a little bit of a savings for the consumer, and we shall see. But for right now, you know, if you look at the chart of USO, you will see that this day was potent enough to give you clues that more downside was happening. And it does seem as if, you know, we're going to have that. And the next real point of reference is now that, like, look at weak sectors. This gave up the 50-day, and the 8 and the 21 are curling over, coming into support. No reason why it doesn't at least test this gap, and it probably fills it, you know, and we see support down here. Okay, gold actually held up a little bit, but I told people you probably should either, you know, gun to head overnight. If I were to be something for a day trade, it would be short gold. Here is your, you know, opened up, closed the lows, tried to hold support, tailed in. I would say because a lot of this move happens overnight, you know, I would rather be short than long. I didn't take a position because tomorrow's Yom Kippur, I'm not going to be in. And if you look at silver, which has been a leading indicator, silver actually started to break below, you know, this upper flag, and typically gold's been next. So, you know, I would just be careful if you're in tier 2 or tier 3 long gold, be in tier 1, and if you're actively trading with no long-term thesis, perhaps, you know, it's a decent short here. If you look, remember when silver broke out, this was what, August 20th? On August 20th, gold, you know, was right here, not ready to break out, and then you had the gap. So I would just say, gun to head, you see more downside in gold and silver, but we've had a hell of a move there. Baidu also gave you a little day trade, then failed. Okay, this obviously did not happen. You know, I was long it too, made a little bit of money, and then lost a trailer. Lately, you know how I know that that things are changing in the past week or so. Okay, Parker, if you traded something and you added a tier for momentum, unless you took it quickly, you could not book any profits. So I would book some profits quickly and then hold something, and then turn around an hour or two later, I would get out of what I held and be stopped out. So that tells me that the momentum was leaving the market. So when momentum leaves, you leave. Doesn't mean you leave as a macro investor or as a swing trader. It just means you have to know your time frame. And right now, momentum is getting iffy. It started, a few days back. So with all this said, switching gears is important. Hopefully, you lightened up. I think a lot of us lightened up into that 1474, and then in that range, we were testing some longs. No one, balls toward tier 2, tier 3, but even tier 1, when things start to falter, hurts a little bit. Hopefully you didn't draw down too much the last 2 days to give back what you've worked hard for from the June 4th lows, or from, the re-energized move that started on August 3rd. And then now if you did, okay, the cost of doing business. Now you wait, we'll see what levels hold, we'll see what acts best, and we'll go from there. It's still a lot of year left. We're only in September, only closing out the third quarter. We talked about the rebalance effect, where maybe people with too much in equities, not enough bonds. They had to reshuffle that JP Morgan we talked about said there's about a percentage point of risk in equities coming into this week, and I think we're down about a percentage point. So there's a lot of things that you need to connect the dots to stay safe, stay profitable, and stay in the driver's seat. And right now, even if we gap up tomorrow and you're in cash, you're still in the driver's seat, because mentally you're okay to do whatever it is you need to do to react to the markets. But when you see a move like you saw in the SPX today, where we closed near the lows of the day, breaking in upper area, the good book says you lighten up, get out, and some momentum guys are probably pretty short. We'll see how we act here, and then we'll see where we hold. And then once again, I showed you the retracement rules. 25% retracement of this move from the low doesn't come into play until even 1421. So keep that in mind. All right, tomorrow I'm not going to be in anyone fasting. Have an easy fast. I have to jump. Scott Redler, T3 Live. See you Thursday. Have a good night. Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.